There's a lot that has happened within the last few weeks in the current mortgage market, so let's try and process everything going on and break it down into 5 easy to understand areas. Let's go. Area 1. So what is happening in the mortgage market? Well, to put it simply, rates have increased to manage the level of inflation, which is the costs of goods and living increasing at an uncontrollable rate. The Bank of England have increased rates on multiple occasions so that it is more expensive to borrow money for a mortgage. This means it's more expensive for banks to buy mortgage funds from the money markets, and therefore they need to increase rates. Area 2. What are mortgage lenders currently doing? So a large amount of mortgage lenders have withdrawn mortgage products, and unfortunately we are seeing a high amount of mortgage decline at present. This is mainly down to the fact that the current rates on the table will lose money, so therefore mortgage lenders withdraw all their products and work out what their new rates and mortgage products will be. Area 3. What's going to happen to mortgage products? So at the moment, options are limited, and unfortunately, when there's uncertainty, most lenders withdraw their higher loan-to-value products, which is ultimately what first-time buyers access as they require lower deposits. I do expect over the next week or two for the market to improve and mortgage lenders start bringing out new products. However, those rates will be higher. We will still have the same level of options in regards to 90 and 95% mortgages. It's hard to tell, but in this instance, I would say yes, we will carry on having 95% mortgages. We do still have the mortgage guarantee scheme from the government, which guarantees 95% mortgages. So I would hope that would certainly help in this instance. Area 4, house prices. So what's going to happen to house prices? I'm sure this is a question on everyone's mind. When it's almost certain that house prices are going to come down with immediate effect, as you know, of recent times it has been a seller's market where you need to put in the asking price or above in order to have a chance of a successful offer being accepted. That is certainly not the tactic to use now, as you need to offset the higher rates and get some of that money back by offering below the asking price. I've had many clients recently who have successfully had offers accepted below the asking price. I'll give you 3 examples. 1, a property for $350,000 was agreed at $325,000. 2, a property for $170,000 was agreed at $160,000. And 3, a property for $250,000 was agreed at $235,000. If you work out the saving and then work out the extra you are paying with the higher rates, you will likely find that this reduction in house price goes a long way towards offsetting the higher rates. It might be an idea as well to lower your target house price a little bit if possible, because rates could still go up further, and whatever happens you need to be able to afford the payments to make sure to give yourself a bit of a buffer. Area 5, what should you do next as a first-time buyer? So this is a question I get all the time. Should I wait? Now, the majority of the time, there's always a reason that you could wait to see if something better comes along. Maybe you're wondering how far house prices will drop or if rates will come down again, that sort of thing. I've always said if you've got an opportunity to get onto the ladder, then take it, as you never know what is around the corner. Even if rates are higher, as you can offset some of that by obtaining an offer below the market price. A mortgage is a marathon, not a sprint. You need to look at this with a long-term vision and not just what's going to be the cheapest option over the next 2 years. A mortgage term is 25, 30, 35, or even 40 years. You're going to experience all of the elements that a market can throw at you. So if you get a great deal now, at some point you're going to have to face higher rates. History tells us that this all goes round in cycles, and long-term property has always proven to be a great investment. If you're at early stages and you're unsure of how to prepare for a future mortgage, just check out our mentorship program, www.firsttimebuyerexpert.co.uk, or if you are ready to look at your options now and have at least a 5% deposit, then just book a free no obligation chat with us by clicking the link in the corner of the screen or the description below. You'll be asked questions about your situation during the process. Today's question: how are you feeling about the mortgage market? What have been your experiences? I'd love to know. Please let me know in the comments below. Mortgage warning. Please note, we do need to let you know that your home may be repossessed if you do not keep up repayments on your mortgage. So thanks for watching today's video. Hope it's provided you with some useful tips. Please check out the show notes for a recap with any access to links discussed today. Please consider subscribing and ringing the bell to receive notifications on our latest videos. I've been Alex Kerr, providing the best mortgage tools and tips. I'll see you in the next one.